Good morning, Genevieve. How are you?
I'm good. How are you?
Good. How's your week been so far?
Crazy.
Yeah? Crazy good, hopefully.
Well, being a consultant and having my own business, I never feel like I can really complain that I'm busy. Like it
Yeah.
means more money in my pocket, unlike when I was an employee and had a fixed salary and I worked
Yep.
80-hour weeks, I didn't get any benefit from that.
Yes. Yes.
So busy good overall, yes, but a little more than I would like, I'll say,
Yeah.
than I would prefer, I should say.
Morning, Kat.
Good morning. Hey, we match.
We do match. Yes,
Color.
we do.
I've got blue on instead of
All of it. I was gonna say all of us do, really?
No, these are not. These are like flower petals, not polka dots.
Oh, yep.
This is the pattern. Most of my closet is blue though, blue and dark colors.
Me too. Kat, you're going to have to come up and see us.
I know, I'm excited. Maybe
Open your
maybe
days.
next week we can schedule a day where I can go up there for lunch or something like that.
That would be awesome.
That would be fun. I haven't been on campus in so long. So
Yeah. Yeah. A few more people jumping on here.
some I'm glad that smoke is finally starting to clear out a bit. It's not
Yeah.
as bad as it has been the last week or two.
Yeah.
Yeah,
hear ya.
I agree.
So thank you all for joining us this morning for our Coffee with Biz Directors. We have a couple of special guests that I will let Mike and Kat introduce here in just a moment. This session is recorded and I have changed all of your names to just first names only. So if you don't want your picture shown, just keep yourself on your video turned off. We want to thank you. If you have any questions, you can either just shout out or you can enter it in the chat. We'll be watching the chat. And thank you for joining us. So I'd like to introduce Mike O'Connell, our Senior Director here at the Larimer SBDC. Mike, why don't you take it away?
Sure. Thank you, Becky. Thank you everybody for being here for our August Directors Coffee. I've also got my peer, Kat Rico, here with us, who is the Loveland Business Development Center Director. We've worked very closely with that organization for a long time and had a tight connection. What we do both at the LBDC and SBDC is a wide range of free one-on-one consulting. We get funded by the SBA, by our host, Front Range Community College, several municipal organizations like the City of Loveland, City of Fort Collins to fund what we do. That's a real support for entrepreneurs as well as for existing small businesses. We also do a wide range of classes, which are pretty much online right now and virtual as our free consulting sessions. So we've got talent and areas that we can help you with, such as finance, marketing, HR, legal, business, buy, sell, advice, etc. So far this year, just for some general numbers, we've consulted with 971 clients, and that is about 2/3 of the way through the year, which is pretty much the full amount that we consulted with all year last year. So we're seeing a lot more clients. People are needing help. They're needing help with some pretty complicated, new, unfamiliar programs like the Economic Injury Disaster Loan, as well as the PPP Payroll Protection Plan loan. So before I introduce Genevieve and Nancy, Kat, can I turn it over to you and feel free to chime in with any additional thoughts if you would?
Yeah, absolutely. So along with having a wide range of skills that our consultants have, the other thing I always like to highlight is that they have a really wide range of industry experience too, because sometimes people need that industry experience, whether you're a restaurant owner or maybe a brewery owner, or you do a small manufacturing company, personal services, creative businesses. So we have consultants not only that have all those great skills that Mike mentioned, but they also have varied industry experience, which, you know, when you combine those two things, can be a lot of really focused help for your business. Some of the sessions that we've got coming up for some of our classes that I just wanted to mention real quick. We do have some QuickBooks training that's coming up. That's a really, really great value if you've never done any QuickBooks training, or maybe you want to send an employee to do some QuickBooks training for your business. So make sure you check the schedule in Fort Collins and in Loveland, because we are running those classes in both locations. We also do these regular coffee chats. We've kind of gone down in frequency to do them about once a month now, but we try and keep these topics really relevant for you as business owners. So we're really flexible with that. If you do have something that you want us to address, feel free to reach out either to myself at the Loveland Business Development Center, or reach out to one of the great staff members at the Larimer SBDC with your topic suggestion. And if we can't focus a whole coffee chat on it, we'll definitely get you connected with the right resource. I think that's pretty much what I got there. So.
Thanks, Kat. Well, today's director chat is on the subject of PPP forgiveness. This is a pretty big opportunity for businesses who have taken out a PPP loan to get most or all of that forgiven, provided that they're keeping the right records and following the right process. And the way that we're going to structure this is I'm going to be shortly introducing Nancy Rumfeld and Geneve Huxley, who I haven't known that long, either one of them, but they have stepped up and become associated with the Small Business Development Center and the Loveland Business Development Center. So I'm actually going to ask them to give the introduction and the bio about themselves, but they're providing a lot of financial, accounting, operational, financial help, et cetera, and as well, they've gotten pretty familiar with the PPP loans and the EIDL loans. So I'm going to turn it over to Nancy first. So Nancy, please introduce yourself if you would, and then feel free to take about 10 minutes and just talk about your experience, your key info that you would like clients to know about PPP forgiveness, and then we're going to ask Geneve to do the same thing. So Nancy, I will turn it over to you and take it away.
Hi, everybody. Good morning. My name is Nancy Rumfeld. I'm the founder, president of Beyond Accounting. I have about 30 years plus experience in accounting and operations. And so I focus on really helping businesses understand how do they marry those two up. As far as the PPP program and the EIDL as well, because that's one of the key components to this COVID relief, is just helping businesses understand how they can apply for it, what they can use the money for. There's a lot of confusion out there about that, how they can spend the money, especially on EIDL, which the EIDL is the Economic Injury Disaster Loan. And correct me if I'm wrong, Mike, but I believe that they're still taking applications for that. They're not doing the advance anymore, but they're still taking applications for the EIDL.
That is correct, Nancy, and I'll actually pop that address in the chat just so everybody's got that info if interested. Thank you.
And the reason the EIDL is so important is for the PPP loan, they did make it available to solopreneurs or those that are only used to Schedule C. They don't have employees, they don't have W-2s. The reason that's so important is for a lot of sole proprietors, they maximize their tax deductions, which means their Schedule C shows a loss. And no matter how you try to do it, a negative number times 2.5 is still a negative number. And so for a lot of those sole proprietors, the EIDL loan is basically their only resource for getting some assistance. And the reason it's available is the EIDL looks at your gross profit. So it takes your revenue less the expenses needed to satisfy those sales, not your operational. And as long as that's a positive number, then you can qualify for the EIDL loan. And for most sole proprietors on that, when they look at it that way, they can get some money that way. That loan, you have a 30-year payback period at 3.75%. So it is a loan, but if you're really in need of working capital, that's a good resource. Even if you did receive the PPP, it's still a good resource for you to find some additional working capital money to help you get through this COVID economic shutdown, pandemic crisis. The PPP, the forgiveness part, which I know a lot of people are starting to wonder about, because the 6-month repayment is going to start pretty soon, especially for those who received their funds in April. That's still up in the air. The HEROES Act is supposed to deal with a lot of that. I looked at the status today. It's been passed by the House. It's stalled in the Senate. And when you look at everything that they've packed into that HEROES Act, it's no wonder it's stalled in the Senate, because they've got, I don't know, anything and everything. I think even the kitchen sink reform is in that act. So I'm not certain how they're going to reconcile the differences, but that's really what's holding it up. The main issue with the PPP forgiveness is, and I know some of this is really can get complex, and for business owners who really just love doing what they do and aren't really that interested in accounting, but this is really key in that the CARES Act said if you get a PPP loan of $20,000 and you get it forgiven, you don't have to say that that's taxable revenue. The IRS, in its infinite wisdom, turned around and said, well, that's cool. You won't be taxed. You don't have to include that in your revenue, but any expenses you used to pay with that forgiven loan, you won't be able to deduct. So it does have some tax consequence. The HEROES Act is supposed to address that, but it's stuck in Congress. Also, the HEROES Act, again, because it's stuck, but one of the things that it was looking to do is automatically forgive all those PPP loans that are 150,000 or less, but that hasn't happened yet because the HEROES Act is stuck in Congress. I also heard that there was confusion on how to record these funds for the PPP. I've actually seen some businesses putting it directly to uncategorized income or other income. And until it's forgiven, you really need to record it as a loan. And so if anyone has questions on that, I'm sure they can set up a consult appointment with Geneva or myself, and we can walk them through how to do that. The other issues is if you did receive the EIDL advance, then no matter what, 100% of your PPP loan won't be forgiven, because if you received a $2,000 EIDL advance, that will be deducted from your PPP loan. So there's a lot of complexity to this, which is why most of my appointments have been spent helping people understand this. And I'm sure Geneva will probably concur with that, but that's really what I have.
Thank you, Nancy. Appreciate that. And by the way, we're going to field questions as we go through this. The easiest way, if you do have a question, is to put it in the chat. And then either Becky or I will be the chat wingmen. And at this point, Geneva, why don't we turn it over to you? You're muted, Geneva.
Doesn't happen that often that I do that, but hi everybody, my name is Geneva Huxley. I'm one of the consultants as well with SBDC, or will be shortly. Still needs to check off a few boxes, I think, to become a consultant. And I am also a consultant like Nancy. I offer outsourced chief financial officer services to small and medium-sized businesses in the Northern Colorado area. And I have a myriad of clients that are in a wide variety of industries, everything from construction to medical device to farming to service providers. So I've been a CPA for 20 years. And thanks, Nancy, for that rundown of the PPP and the EIDL. That's a really good base to start with. I'm not sure that I can add a whole lot about that. I will say that when it comes to the PPP forgiveness piece, the application was really quite simple and direct. And short to try to get the money into the hands of those business owners quickly back in the spring. The forgiveness piece is a little bit more onerous. If you satisfy certain requirements, you can file a form that they're calling the EZ form, but it's limited to companies that have certain criteria. And I think it's if you had no reduction, and Nancy, check on me if this is correct. It's if you have no reduction in the in your headcount, your employee headcount from as measured from January to March this year to the time period during which you're applying for forgiveness, whether that's the 8 weeks or the 24 weeks.
Right, as long as it's under 25%. Some
Under
businesses.
25% reduction in employee headcount. Okay. If you had more reduction in headcount than 25% of your employees, then you do have to go through a longer form that calculates. What happens is if you have a larger reduction in your employee headcount and or your salary and hours that you've been paying employees compared to that base term, there is a portion of the loan that will not be forgiven, but it's not a cliff. It's not an all or nothing. It's more of a prorated forgiveness amount. So it might be reduced a little bit. The good news is that if it is reduced, it stays a loan, and you have, I think it's either 2 years or 5 years. Did they change it? I think 5 changes. They're changing the rules all the time. Sometimes it's hard to keep track of what's passed and what's not passed. 5 years at a 1% rate. So it's really a great loan to have, even if it is debt. It's really cheap access to cash if you need it to be able to run your business during this difficult time. So that's all I'll say about it at this point. Looks like we started to have some questions in the chat.
Nancy, you fielded a question in the chat about the EIDL advance and the interplay with the PPP loan. Maybe you could elaborate on that, your response there a bit for Brianna.
So the way that and I don't think a lot of people understood this. I mean, it was out there, but it wasn't really clear, is that if you applied for the EIDL loan, in the beginning, you could receive an advance of $1,000 per employee up to $10,000. So that's since the money for that part has run away. But if you also applied for a PPP loan, and as the example, you received a PPP loan of $10,000, and you also had received an EIDL advance of $2,000, the most you can get forgiven is $8,000. They're not allowing you to, have that EIDL advance. They're working it against the PPP forgiveness amount. Again, I don't understand some of their logic sometimes. Those are their rules, however they came up with them in their back room. I don't know.
I think the premise was supposed to be that they're both coming from federal dollars, so you couldn't, as a business, double dip 2 federal dollars. So the EIDL came through the SBA disaster relief group, and the PPP loans are coming from the private sector banking group, but through Treasury and the SBA, and it was supposed to be an avoidance of double dipping. That's how I understand it. Your description is probably more accurate, Nancy.
I would also add that if you did receive the EIDL advance, that for sure goes directly to your account called other income, and it would be non-taxable, whatever you want to call it, COVID relief, EIDL, because it is a grant, so it's not taxable. And there aren't any rules like with the PPP that you can't deduct your business expenses that you paid with it. So in that instance, they did make it truly tax-free.
One thing I'll add for that EIDL loan, the advance, there's just to differentiate the two, there's an EIDL advance and then there's an EIDL loan. And the piece that's the EIDL advance is what was the $1,000 per employee up to $10,000 total. And that is a grant that Nancy was talking about. That is different than an EIDL loan, which you can also get, that is definitely a loan. And that's got that payback that Nancy was talking about earlier, that was 3 years, three-year payback for 3.5%, I think is what it is.
Yeah, 30 years.
30-year.
Mhm.
Okay. So just to note that those two are different. The EIDL loan and the EIDL advance are two different things. And I also recommend on when you're tracking that stuff in QuickBooks or whatever bookkeeping service you use on that other income, name the account or put a note in there that says that it's an EIDL advance, because that's going to help your tax preparer get your tax return right and be sure that they're putting the income and the expenses in the right spots and excluding what they need to exclude from either deductions or the income, so you don't end up inadvertently paying tax on something that you shouldn't need to. Try to really call that out and point it out to your tax person.
So did you have anything else to add, Nancy, on that?
No, I mean, all I can say is we all know that when it goes time to do your taxes for 2020, I have no idea how they're going to put all of this on the tax return. That'll be interesting.
Yeah, it will be. So you guys have both kind of hit on that there are some allowable expense or forgivable expenses and non-forgivable expenses. So can you give us all, I know we've gone over this a couple of times in other chats, but you know, we've got a different mix of people here. So can you please go over the difference between what are forgivable expenses for the PPP versus the EIDL and how those kind of interplay?
I would start with the EIDL because that's the one that has a lot of confusion. So the EIDL, you can use it to cover working capital or operational expenses, which can include payroll. If you also receive PPP money, you have to use your PPP money first to cover any payroll expenses. And once that's exhausted, then you can start using EIDL funds to cover payroll. You don't need to do anything crazy in your accounting records. You know, most people are just using a spreadsheet to just kind of keep track of, you know, I got 25,000 from EIDL, here's what I've spent it on. And here's all the receipts in one folder so you can easily document it. The other thing with EIDL is you are not allowed to use it to buy assets or to do remodel or to expand your building or to buy another business or to relocate. Is for operational expenses. So while it says you can't pay down debt with it, credit cards are considered short term, so that's allowable. If you find that you don't have enough money to make your loan payments on your long-term debt, EIDL is saying you can use it to make those payments to keep your long-term debt current. And you can use it to, you know, like your utility, you know, again, your utilities. If you've already exhausted all of your PPP, that's also earmarked to use for utilities. You know, if you needed to buy, you know, operational expenses, I don't know, office supplies, cases, pallets of sanitizer and gloves.
PPE, yeah.
Those types of things. The PPP you are to use for payroll expenses, rent, and utilities. And utilities does include internet. My mind just went blank because I just lost track of what I was saying. Maybe there's so many things to remember.
The PPP, sure, I can pick up. The PPP loan is supposed to be mainly for using for payroll expenses. So you need the hope by Congress when they were, well, when drafting and revising it, is that at least 60% of your PPP loan should be used for payroll expenses like wages, salaries, cash tips, and health insurance that the company pays for the employees. The employer portion, I should say, of the medical insurance. And so that's the largest chunk of what PPP is supposed to be used for. The 40%, you can use up to 40% of PPP on things like rent expense for your office building, mortgage interest expense if you own the building, but not the principal, just the interest expense. And then utilities is another one. So things like gas, electric, water. And I think we did finally find out that internet and phone did count as, we knew phone counted as utilities. I think we did figure out that internet counted as utilities too. If there was ever a comment that internet was not a utility, I think now is a great example of the fact in COVID times, it is certainly a necessity to make a business continue running. So that's what happens with a PPP. And the 60% on payroll is not a cliff. Again, that's a prorated amount. Really what it is, the maximum amount you can use for mortgage and utilities and non-payroll expenses is 40%. You can't use any more than 40% on of the PPP loan amount on those to be forgivable expenses.
This is Becky. Nancy, you just answered Brenna's question about do you have the document expenses, do you have to document expenses paid within an EIDL advance? Do you want to go over that in a little more detail, please?
I would just say it's similar to the EIDL loan. Just, you know, you can include a note in your transaction, whether it's in QuickBooks or Sage or whatever, and just say, you know, EIDL loan funds or EIDL advance funds, just so you can show that this is how I spent the money. You don't need to create separate accounts or classes or, I mean, accounting already for the non-business owner is complicated and makes them a little like, I don't like this, so let's keep it simple. You know, a spreadsheet is also a great way to just started with 25,000 loan, 2,000 advance. Here's what I spent all the money on. Here's how much I have left. You know, and then I would just keep all of the receipts in one folder. So again, it makes it very simple. It's unlikely, it's just like with an IRS audit. It's unlikely you'll be audited by the SBA, but just like with an IRS loan or audits, you always want to make sure, you know, you have everything documented and easily separated and available, you know, to just quickly show out and show what you spent it on.
Nancy and Geneve, I've got a question that I'm just wanted to see how you would react to this. But if I were, say I've gotten a new PPP loan or I have a PPP loan as a business owner, what would you advise or suggest would be the top 2 or 3 things to have them manage that properly and keep track of it and stay on the right path? What would you suggest besides getting informed on calls like this?
You know, for the payroll, depending on what service you use, whether it's Gusto or iSolve or it's built into QuickBooks or Sage, I mean, they have all stepped up and quickly written their programs, added reports that will help you show, here's what my FTE was before, now my phone's ringing, I gotta mute that. Before the disaster, here's what it is currently. So you can really see, you know, and a lot of them, they've all done that. And that's the biggest issue. You know, your utilities, you know, just again, make sure you have copies of all of your utilities, your rent, and you know, those are standard things that you should have anyway when you're paying your accounts payable. But I don't know if you have anything to add to that, Janine.
I guess probably the biggest thing that I've seen is that now, so initially when the PPP first came out, the government said that you had to spend all of this money within an 8-week time period. And it was going to actually be quite difficult for companies to do that because many states were not yet opened back up and we're still in, you know, a form of lockdown without restaurants open, without stores open. And so one of the subsequent laws passed said that you could elect a 24-week term to spend the money. And if you received your PPP loan prior to June 5th, then you can elect either 8 weeks or 24 weeks. And if you received your PPP loan funds on June 5th or later, that you would automatically have that 24 weeks. And since there's a mix of payroll and other expenses that are allowed with PPP, if it's easier for you to spend all of the PPP funding in 24 weeks with just your payroll, I would actually recommend just using payroll to when you go to apply for forgiveness for that time period of 24 weeks, because it's easier. You should have reports directly from your payroll system that come out that and your 941s, your quarterly tax filings for payroll, that are going to make it pretty quick and easy to gather that information for forgiveness. So I would say once you're ready to apply and you have your information together, you probably will have more than enough expenses to cover that, your loan amount, if you're using that 24-week time period. And as such, I think it's just going to be easier, and it's to pull information together related to payroll. So that's probably what I would spend a little bit more time on pulling together.
Thanks, Janine.
Great.
Yeah.
We've got another question that came through in the chat. So it's again about some of those allowable expenses and clarification on them. So Brenna asked, do we have clarification yet on what transportation is as far as PPP expenses?
I haven't seen anything regarding transportation.
I remember hearing about it early on, but I agree. I don't know that it's really, they've spent time clarifying that. So what I would wonder is, are you feeling like you're not going to have enough expenses in the other allowed categories without transportation? Brina, is that part of what the concern is? If you want to write in the chat or if you want to chime in.
Looks like she unmuted herself, so I don't know if we can hear her.
No, I can't hear you, Brenna. So it's unclear. I agree with you, Nancy. I haven't seen much other discussion about that. So if you can get forgiveness on your loan amounts without including transportation, that's what I would do. Her mic's not working, I guess.
Yeah, I'm looking to see if I see anything. The only thing I found can find is that there was some reference to that was really intended for the self-employed, but there just hasn't been a lot of information provided on it or guidance.
Yeah.
It's all been on utilities, rent, mortgage interest if you happen to own your building, those types of things. But
I would, and I see you saying about fuel, but not sure about car payments. My guess would be that if transportation costs are included, car payments probably would not, at least not the principal portion of those payments. And I'm saying that I'm just extrapolating the like similar to the rent and mortgage interest. If you own the building, you can deduct that mortgage interest against the PPP loan, or not deduct, take it, that's an allowable expense. But the principal is not. So if transportation and car loan payments were allowed, it would only be the interest portion of those payments, perhaps.
yeah, I'm seeing that a lot of people are guessing, which is not, when it comes to government, they're taking a guess that what they meant was fuel for business vehicles. But, that doesn't give me a warm fuzzy that people are just out there writing and saying, this is our best guess, what we think the SBA means. So I would just err on the side of caution and not, unless it's something you really need to help reach that 100% forgivable amount. I would probably just avoid using transportation because it's so unclear. There's not a lot of clarity around it.
I feel like I have seen more wordings, and I see more information from you here, Brenna. Your business sits on the same property as your owner's house, and you're hoping not to have to use utilities since they have the same bill for the residents. I have seen some guidance, and Nancy, please confirm or correct me on this, that those of us that work out of our home, I work out of my home as well. Those of us that work out of our home, that home office deduction you usually get on your taxes, that is not considered a forgivable expense on PPP. Is that what you understand, Nancy?
No, you can
now.
You can deduct out of your home office the portion of utilities, mortgage interest that are attributable to whatever your space is. You know,
Okay.
but you can't double dip. So if you're going to use some portion of your home office deduction, you know, to reach your PPP 100% forgiveness, you can't then on your tax return take 100% of your normal home office deduction, which goes back
Okay.
to, I don't know how Intuit, H&R Block are going to write to calculate taxes, because there's going to be all of these issues, especially if you take the simplified home office deduction, I think that's also going to have a really crazy fuzzy area. If you're doing home office deduction and you do it based on percentage of actual expenses for the entire house, that's a little easier, cleaner to figure out. But again, you can't double dip. If you're going to use some of that for the PPP forgiveness, and when you go to file for 2020, you can't subtract 100% of what those office deductions would be. And I'm sure for a lot of people on the call, that's like probably clear as mud, but sorry.
That's the perfect example of why you should work with an accountant on some of this stuff, right?
Yes. Yes. Brenna, are you, it looks like maybe you usually file on your Schedule C, because I'm wondering if you have any payroll expenses or if it's just a Schedule C and it's just yourself. Can you answer that question in the chat?
She
You're an
says
S
there.
Corp,
So you should have payroll expenses.
1.5 full-time employees. So I would use your salaries and wages for you and the employees as much as you can. Probably elect that 24-week time period so that you can easily use up all of the loan PPP amounts in that 24 weeks. And you may not even have to worry about the utilities, the home office, the transportation stuff. You're having trouble reaching. Have you gotten to the end of your 24 weeks yet? Are you just not projecting you're going to be able to do that? You can go more than 60% on the payroll. You can make it 100% if you wanted to. It'll just barely make the 60%, she's saying. Okay. Yeah,
Again, I know people don't want debt, but as Genevieve was saying, a loan at 5%, at 5 years, 1% is, while it is a loan, at 1% interest, it's, by the time you factor in everything, it's basically, you know, no one's making money on it.
right. So if you have a $10,000 PPP loan amount that's not forgiven, at that 1% interest in a whole year, it'll end up costing you $100 on that interest for the use of that $10,000 of cash. So that's really low. And if you don't have continued need for the cash, you can also take the cash that's left that's not forgiven and pay it off. But I honestly wouldn't do that for $100 a year, less than $10 a month. I would keep it and slowly pay it off, because you never know when you might need that additional cash.
Thanks, ladies. And Brenna, by the way, if you haven't been in to see the SBDC or the LBDC and you did want to get some consulting specifically for your situation, we provide that free, so that is available. I wanted to take a minute and just make sure anyone else doesn't have any questions in the audience, any businesses that are out there, any questions that you wanted to throw out or put in the chat that we should address while we're here. Okay. Well, feel free to put that in if you do think of something. I think, Kat, if you, unless you had anything else, we could probably ask Nancy and Genevieve if they have any closing thoughts. I think we covered a lot of the key points that we wanted to cover in this content. So any closing comments or thoughts, Nancy and Genevieve?
Well,
my only thought is,
just for me real quick, I just want to kind of go through some of what our top level talking points were for everything. So, you know, we went over the 8-week versus the 24-week forgiveness timeframe. We kind of covered very briefly some of the differences between the 3508EZ and the 3508 regular form. We kind of talked a little bit about the legislative status of some of the IRS rules. and also kind of the pending status of the legislation on forgiveness or automatic forgiveness. And then the difference between the PPP expenses and the EIDL expenses. So that's just kind of a quick recap of most of what we talked about here. So yeah, I'll kick it over to Nancy and Genevieve if they have anything else to add to this, and give our audience time to ask some more questions if they do have them.
My only closing is that I know that a lot of the banks, my bank in particular, Independent Financial, they have not yet made available their portal to, apply, because I think, and I don't think we have anyone here from any of the banks, a lot of the banks are still kind of waiting for more guidance for the SBA on what they're supposed to do. And everyone's also kind of in limbo on, well, what is Congress going to do with this? Again, forgiveness, you don't have to apply until December 31st at the very latest. So for some, that might mean you have to make a couple loan payments, maybe. But, I would, if you can hold off, I know it gets, everybody's a little like, oh, I want to get, I want to know the answer now, but try to be patient. And if anyone has specific questions, like Mike was saying, where they don't want to really raise it in a group like this, please make an appointment, and Genevieve or I will work with you one-on-one for an hour appointment at no charge, and try to address your specific questions to your situation.
And Nancy, I'm glad you brought up the point about the banks, because I was actually going to make a comment about that. But I've observed the very similar situation and experience to what you're talking about with Independent Financial, where there's a sense that they're not quite at the point where they're accepting forgiveness applications for this. So it's, I've heard several experiences where clients have gone to the banks, they've asked them, what do I have to do? How do I start applying? And the banks are saying, hold off, we're not quite there yet. So that's not an unusual situation.
Yeah, and I can confirm I was at an event yesterday and I was speaking with someone from A&B Bank, and it's the same thing. So I have a feeling it's the same across every single bank, local or national chain bank, that's kind of where it is.
Yeah, it took them a while to get the application process built into their website in such a quick fashion. And that was a very simple calculation and a very simple set of instructions. So it's a lot more involved just from a simple write the software perspective to get the forgiveness in there. So I've seen the same thing. I haven't heard of anybody actually being able to apply for forgiveness yet. None of my clients have. So yeah, we're kind of in a waiting game, at least until the banks kind of get themselves ready to accept that.
Yeah, it looks like we got another question that was dropped into chat, and Mike, I think you'll probably be best at fielding this one. So Sylvia asked, who should she call regarding EIDL and Colorado Gap loans?
Sure. On the EIDL loans, I put that contact website in the chat earlier. So if you go up to the chat, you'll see that in there. And on the Colorado Gap loan, Energize Colorado does have a gap fund. I will try to find the website, and that actually opens, meaning they're going to start to accept applications and lend money this coming Monday, the 31st. So those are the contact points, and I'll try to get the Energize Colorado part into the gap. Into the site. You asked the question also about you have an EIDL loan, how does it play with Energize Colorado? The answer is we don't know exactly yet. We've got to see the completed application from Energize Colorado. It's probably going to have some guidance there. I do know that Energize Colorado, one of their priorities is to get money lent to businesses who did not get EIDL loans or PPP loans. So it might not make a difference in how they're going to evaluate the loan, but you might not be at the top of the priority stack in terms of the objective of the Energize Colorado Gap Fund. So, and Genevieve, thank you. I just saw you put that in there. So.
Becky's link is a little bit more cleaner than mine. I just followed the one from the email from the SBDC this morning, but yes, I think that the Energize Colorado loan has a focus. It's not a first come, first serve is what your email said this morning. And it's a focus on minority owned and women owned businesses.
Yep.
So they're actually going to focus on getting money to those people first, since it's not a first come, first serve. So that's something else to know as well.
Good point. Genevieve, did you have any final closing thoughts from your standpoint that you wanted to express that we didn't get a chance to hear?
I did not. I didn't have anything else. Thank you, Nancy, for all your help with this. Nancy's been keeping more on top of it because she's helping to keep the rest of us in the finance group at SBDC on top of some of this stuff. There's so much that's changing and stuff that comes out. It's hard to keep track of. So thanks to Nancy for doing that.
And thanks to you both. Any final questions from our listeners?
Mike, I would just like to say one more time also that in the top of the chat, if you would like to meet with a consultant one-on-one, if you have any specific questions, just reach out to us. I listed both the Loveland Business Development Center and the Larimer SBDC's information. So reach out to us, give us a call, pop us an email, and we can get that one-on-one scheduled for you.
Thank you. Kat, any final comments from you?
I want to thank both Nancy and Genevieve, because keeping track of this stuff, I know I can't keep track of it. And as they mentioned, some of this stuff changes by the hour. It has slowed down a little bit since the beginning of the process, but keeping up with it, especially as all of the tax rules and the IRS changes and new legislation and everything comes out, is an extremely valuable thing for our business owners, because they have enough to worry about with keeping their doors open and complying with, PPE requirements from the county and health and everything like that. And trying to keep track of, what's going on with some of this forgiveness stuff is just a whole nother piece. And they're an excellent, excellent resource. So thank you for keeping track of that.
They sure are. And it takes commitment and help to be an SBDC, LBDC consultant. In addition to running their own businesses, Nancy's is beyond accounting. I hear her ads on the radio. Sounds very good. And Genevieve's is Huxley CPA Consulting. So thanks again to both of you for being on this call and covering this essential material at this point in time.
Thank you.
Great.
Thank
Thanks
you all.
all.
Everyone, have a great day.
Take care.
You too. Bye.
Bye-bye.
Bye.